Okay, continuation purges. Okay, this is following along with the previous lessons because the time frame aligned ranges are going to be extremely crucial to understanding how we can catch high probability continuation purges, right? You guys who have been with me for a while know how much emphasis I put on continuation purges. In my first course, I called it the universal model, right? Because it really is universal, and it's one of those concepts, right, that is so high probability, okay, and is so consistent across every market. It's the easiest trade, in my opinion, to catch is that continuation purge in alignment with the LTP and ITP range, okay? Okay, this is one of the foundations to the ITP timeframes because, like I mentioned, the market will only seek to do two things on an ITP timeframe: to trade to the LTP, draw on liquidity, rebalance and imbalance, and run stops. In this case, we're looking at the run of stops in the direction of that LTP direction and the ITP range, the time frame aligned range. Okay, range low to high with bullish continuation purges on the way to range high, range high to low with bearish continuation purges on the way to range low. A continuation purge must be a run of a swing high on a relevant lower time frame than the range. Okay, time frame alignment for continuation purges. When we have a monthly key level, right? Remember, we go to a daily range. Okay, now if you're going to trade continuation purges, right, we would use 4-hour continuation purges. Okay, and if you wanted to fractalize this even more, you would then look at M15 entries. Okay, haven't included that here, but you can do that in your backtesting. Weekly key level, H4 range, H1 continuation purges. Daily key level, H1 range, M15 continuation purges, right? This is the time frame alignment you want to use for these continuation purges. Okay, so let's start off with the first example, right? Monthly key level, daily range, 4-hour continuation purges. Let's have a look at what this looks like on the chart. So we're going to be looking at the shorts from this monthly key level here. We're in a premium over here. This is a key level. This is a redelivered rebalanced key level, okay? This is when this wicks closes, right? And then you have this imbalance here. Because it's a wick, right? This is what I call redelivered rebalanced. We trade up into the monthly key level. We then look for a daily range. You guys should know this by now, right? So we go from daily buy stops, right, to daily sell stops in alignment with that monthly key level, right? So now on the way down here, after we get the change in state of delivery right there on the daily chart, okay? So important to note, you want to start looking for continuation purges after you get that CSD on the ranges time frame. So as soon as the candle closes here, you can start looking for continuation purges on the 4-hour until we get to the daily range low. So we had that CSD here. Then notice the market retraces back up into a short-term premium from this high to this low. It then runs out a 4-hour swing high, continuation purge to sell off. Right? Again, from this high to this low, discount market, okay? Market trades up, continuation purge, right? Accumulates the stops above the 4-hour high, right? This is the sequence, okay? 4-hour dealing range, right? Range within a dealing range. Remember that from the ranges lesson. Continuation purge, sells off aggressively. Small dealing range here. Discount low, premium high, trades into premium, has a range within a dealing range, 4-hour time frame aligned with this, sells off, takes out the range low. Okay, extremely high probability when you're blending all the time frames together like this and you're using the lessons together. Notice how we're blending a lot of the lessons together, including how we use the dealing ranges with a range within a range. Now when you use it with this time frame alignment, it becomes very interesting how high probability your trades are going to be. Okay, let's look at the weekly key level, 4-hour range, and 1-hour continuation purges. Okay, so remember that weekly key level here, we had the daily rejection block, okay? We're going to look at the daily fair value gap here, trading up into the weekly rejection block. Weekly rejection block, okay, gets traded to here, okay? Then we have buy stops and sell stops. So a 4-hour range for the weekly key level. We then also have this one candle here, we close within, we can be aiming for this low, and then eventually the 4-hour range is low, time frame aligned range with the weekly key level, and within this move down, okay, we're looking for 1 hour continuation purges. That sets the stage to sell off aggressively. Okay, so what do you see here? Okay, remember from the past examples. Just take a second and see if you can spot it. Okay, so in this case, there's only one continuation purge here, because remember, it's not a run of a previous candle high. It is a run of a swing high relative to a short-term premium or discount. So we can see here from this high to this low, this is in a premium, and we have this 1 hour swing high. This becomes our continuation purge. And look at the move post continuation purge. It's always fast and aggressive, right? This is why I love trading the continuation purges. Okay, daily key level, H1 range, M15 continuation purges. Okay, so from higher time frame key level in a discount from this low to this high to premium key level. Again, remember blending all the lessons together. So we're going to look at the daily move from a discount array to a premium high time frame key level. So daily fair value gap, okay, we blend that with what? A H1 range, right? So we have the low that's obviously connected to this high. That's our range. Trade below, we're accumulating. Remember when we're doing this below a low, what did I say? It's accumulating the stops below this low. And now we want to trade to the range high after the range lows got taken, and we're going to use 15-minute continuation purges to make our way to the opposing end of the range. Okay, so 15-minute chart here. First continuation purge here, relative equal lows. Also a double purge, right? This low caused the break of this high, making it higher probability. Then what do you see? Expansion. Again, the market trades lower. Continuation purge on the 15-minute time frame. Market aggressively trades higher. Again, continuation purge below this, then the market trades higher. Now, I want you guys to think of something, okay? In all the examples I've shared with you, okay, when we've seen the time frame aligned range and we use it with this specific logic, going from a specific high time frame key level to a specific timed range to a specific time interval, right? For the continuation purges, how many times does it fail? When we go below that swing low. That should set off a light bulb because it rarely ever fails, okay? Notice when we go below this swing low, rejection, again, swing low, rejection, again, swing low, rejection. Relative to what, right? Discount low, premium high. Trades into discount, discount continuation purge. Low, high. Low in discount, continuation purge. Low, high, premium, discount, continuation purge into discount. Runs up higher. Rarely fails. This is so high probability, and if you guys incorporate this in your trading the way I've just explained here, you're going to see a lot of success, okay?